Hi, this is Keith Atto, and this is the Friday midday market wrap-up for the week. And the disclaimer here is this is not investment advice. Please take any information you find here or elsewhere, for that matter, to your financial planner before investing in any financial instrument. What we have this week, we had Art Cashin on CNBC. He's lightening up on his portfolio, and he's a good man to listen to. He's been around a long time, and he's more of a risk manager as opposed to a predictive. He thinks the market's going to pull back a little bit, but not extremely negative either. We had our three old friends, and the U.S. housing, China, and the U.S. dollar. And that's really how I look at the world in terms of the financials right now. The housing market had some very positive news in terms of the Case-Shiller index. It was up 2.9% for the quarter. Very, very impressive. And the new home purchases were up 433,000 versus 395,000 the previous period. And so that is coming along nicely. We also have China was steady, really. They've had lots of volatility over there in the Shanghai market, and but one thing they've stopped their stockpiling of iron ore, aluminum, and it's shown in the Baltic Dry Index. It's about 2430 and around there, and it's up a little bit for the week, but not anything significant. And so it's sort of treading water in around that area, which means that the global trade is not growing, and we should be aware of that. China's also restrained bank lending on certain areas and trying to cool down the speculative part of the stock market, and they seem to have done that this week. So we also have the U.S. euro dollar, and that as well. The euro strengthened a little bit, but not substantially. It's still trying to get above that 143.50. It's it's 143.60 right now, but it really has to go above 144 before it goes into sort of strong territory. And but the U.S. dollar is definitely under attack, and we should be well aware of that, especially in terms of commodity pricing. In terms of commodity pricing in a basket of currencies, commodities have not risen that much, but in terms of U.S. dollars, a lot, being as it wasn't too long ago that the euro was 125, the U.S. dollar, in terms of now it's 143.60. So that's a pretty substantial increase. We also have one other thing I think we should look at, and that's crude. The crude storage at sea. It's now 100 million barrels floating around in ships, and it's gone up 10 million in the 2 weeks prior to August 1st. And so it's increasing, and that is all crude that has been sold forward in terms of, or at least a substantial portion of it. And so that's going to come onto the market in terms of delivery during the next 12 months, and so there's a big overhang on the crude market, even though it is not showing any signs of decreasing in terms of the U.S. dollar. It could be a devaluation of the U.S. dollar more than an increase in the price of crude. So we also had personal income and spending was pretty well as expected, and durable goods other than cars and trucks and aircraft pretty well missed earlier in the week. And the big news today, of course, was Intel raised their outlook, and it popped the market up, although now it's down a little bit in terms of, but it's down 42 on the Dow and 2.7 on the S&P. So it's basically a flat week. We're at a plateau on terms of the Dow Jones and the S&P for the week. Small movements, but nothing to speak of. Although there was some whipsaw back and forth due to the low liquidity, and we're going to see that next week as well. These 2 weeks before Labor Day are historically low liquidity weeks. So once again, trade safe, have rules, know what they are, trade by them, and have a good day and a good weekend. And I'll be back to you on Monday around noon with